Okay, that's the word coming in from UBL, which is indeed getting a thumbs up from the markets after its earnings. Lots of earnings. Let's also address Equitas Small Finance Bank. I have with me Mr. P.N. Vasudevan, MD and CEO, joining in on the show right now. Mr. Vasudevan, your second quarter asset, just analyzing your asset quality for the third quarter. Help us understand, how do you see it shape up going forward?
So the third quarter was a pretty good quarter, and we did put a lot of focus on continuing to keep a lot of focus on the collections in the third quarter also, and that's really yielded a good amount of results. If you see, the gross NPA slippage is among the lowest in the last few quarters, and of course the GNPA percentage also has come down to 4.35% from 4.65. And the 1 to 90 bucket overdues also has come down during the third quarter compared to the second quarter. And our credit cost, if you see for the quarter, is moderated a lot compared to the first and the second quarter. I wouldn't say it is back to the pre-COVID level, but it's very, very close to that. So going forward, we believe that our customers have really overcome the pandemic related stress, and we believe that going forward the asset quality should come back to our normal pre-COVID levels. And our credit cost pre-COVID used to be around 1.1 to 1.2%. This year, I think it might touch about 2.5. That's what we have guided, and that's looking likely. But from next year onwards, we should see our credit cost going back to our normal levels.
Okay. As I see it, that your cost of funds as well have come down for the third quarter. Do you expect to continue as the bank scales up? And what is really leading to this, you think?
Yeah, so our cost of funds has been coming down over the last few quarters, and we expect that to continue to come down a little bit more, even though we are all aware that the interest rate cycle is in the upturn today, and everybody expects the interest rates to start rising over maybe the next 2 to 3 quarters. But in our case, what has happened is that we have a lot of the old fixed deposits which are at a higher rate, and they are getting repriced at a lower rate. And that's why we see our rates coming down, cost of funds coming down. Even though we might also, join the party and increase the deposit rate to some extent, but even then the old deposits getting repriced should continue to help us. And even our revised pricing that we might come out with will still be significantly lower than our rates which we used to offer about a year to 2 years back. So I think we should continue to see a small level of moderation or coming down of our interest cost over the next 2 to 3 quarters.
Let's get a move on then. We were in conversation with the management of Equitas Small Finance Bank talking about their quarterly earnings. Mr. P.N. Vasudevan, the Managing Director and CEO, was with us. Apologies for that interruption, but just to get right back, I wanted to talk about your key growth verticals. Small business loans, if you could tell us what you've lined up for this and what kind of trend you're seeing on ground.
So the small business loan is our flagship program, and it's about 45% of our total book. Basically small business loans are loans given to very small, tiny business people who are running a shop or running a service station for cell phone repairs or two-wheeler mechanics, or those kind of very small businesses. That's basically where we fund, and they're all secured by a house property as a mortgage. And we have been doing it now for about 10 years. So we have a large amount of experience in this, and that's been our high growth product also over the last few years. And during the pandemic and now post the pandemic also, we see that portfolio continuing to do very well, and the NPA and the performance has been very, very strong. So that's our growth focus area going forward. Our commercial vehicles, which is about 25%, should continue to remain around the 20 to 25% level going forward also. The commercial vehicle cycle again is expected to be on an upturn over the next few quarters. The early signs of recovery is very strong. The freight rates have been going up over the last 2 to 3 months, and we see the commercial vehicle continuing to perform well in the next few quarters. So our focus should remain there, and that should continue to contribute about 25%, which is where it is today. The microfinance about 18% of the book, and that might moderate to around the 15% level is what we expect over the next 2 to 3 years. And so microfinance recoveries have been very strong in the last 2, 3, 4 months, not just for us, but across the industry. And today at 18%, we are very comfortable with the contribution of microfinance to the total book, though it might reduce to 16 or 15% over the next 2, 3 years. So overall, if you look at it, we have a very good spread of lending products, and we are all the products are targeted at the informal economic customers. The unmet demand continues to remain very strong, and so we expect that we should be able to go back to our pre-COVID levels of growth, which used to be around 30% plus. So I think we should be able to go back to that from next year.
Another key focus segment for the company is affordable housing loans. And given the fact that in the era of the pandemic, we have seen a lot of traction pick up within this segment, what is the growth outlook that you foresee?
Yes, so we started this pre-COVID. We started it from Gujarat. We launched it in Gujarat pre-COVID, and then of course after the onset of the first 6 months of COVID, nothing much could be done. But subsequent to that, the momentum has been picking up, and this year we have expanded it to Maharashtra, and also we have expanded it to South now. So we have started affordable housing from Tamil Nadu, Karnataka, and Andhra. We haven't started. We should be starting that next quarter. So the initial traction of affordable housing has been very good, and I think this will be one of right now affordable housing contributes about around 4% of the book, but we expect that should touch about 10% over the next 2 to 3 years.
Thank you so much for sharing with us your growth outlook. The stock price